You guys have a great day. So today we've got a very important live stream because a lot of the biggest stories right now are pointing in the same direction. The world is becoming more digital, we know, becoming more automated and more connected to crypto and AI faster than most people expected. And honestly, TradFi, so traditional finance, is slowly starting to accept that reality as well. So we're starting with Bitcoin and Wall Street because one of the biggest developments right now is Morgan Stanley pushing deeper into crypto. The bank is now rolling out Bitcoin and crypto trading directly on E-Trade. That means millions of traditional investors may soon be able to buy Bitcoin the same way they buy stocks. So no separate crypto exchange, no complicated onboarding, just another tap inside your brokerage account. And personally, I think this is one of the clearest signs yet that crypto is becoming part of that TradFi system. But at the same time, the Bitcoin narrative itself is changing because Michael Saylor and Strategy are now openly talking about potentially selling Bitcoin strategically if needed. That is, of course, a major shift. Like, are we entering a black swan event in 2026? For years, the message was never sell your Bitcoin from Michael Saylor. But now the conversation is becoming much more focused on maybe balance sheet management, on cash flow, preferred dividends, and financial products like STRC. So today we'll break down why this may not actually be too bearish, too concerning, and why this is probably just how institutions naturally operate. We also talk about A16Z raising a massive $2.2 billion crypto fund. And honestly, the more interesting part is their message. Some of the biggest investors in crypto are now openly saying large parts of the industry are dying. So we simply have too many zombie coins, too many ghost chains, and too much speculation without real usage. And capital is now concentrating into smaller areas, smaller sectors like Bitcoin, like stablecoins, AI agent systems, and RWA or tokenization. That tells you the industry is entering a much more serious phase right now. Then we move into AI because AI race is accelerating again. Apple is reportedly preparing to open iPhones to outside AI models in iOS 27, meaning future Siri requests could potentially be powered by Google Gemini or Claude or other third-party AI systems. That is a very different strategy from Apple, and it shows just how much pressure the company is feeling in the AI race. We'll also break down Palantir's earning because the company just reported a very explosive AI-driven growth, yet the stock still fell afterward. That tells you investors are becoming more demanding when it comes to AI companies. We'll also have some important geopolitical story today. Russia and North Korea are building a new bridge connecting the two countries directly. Not just symbolic operation anymore, but actual infrastructure. So we're talking about some trade routes being built and potentially military logistics as well. At the same time, we'll discuss some very disturbing reports coming out of the Ukraine war that remind how brutal prolonged warfare can become when supply lines collapse and survival conditions deteriorate. We'll also talk about Bitcoin mining because Colombia's president is now openly supporting Bitcoin mining power by renewable energy. And that's interesting because he's known as it's more like a climate-focused leader. So globally, the conversation around Bitcoin mining is changing. More governments are now viewing it through the lens of energy monetization or infrastructure and economic development. So today is really about one big transition. So Wall Street is changing, crypto is changing, so is AI, and governments around the world are also adjusting very quickly to these shifts. So we've got a lot to break down today. Let's get straight into the first story that we need to cover, being Morgan Stanley is officially bringing Bitcoin trading directly to E-Trade. So, of course, they are pushing deeper into the crypto world. And take a look at this. Like the bank is now rolling out Bitcoin and crypto trading directly on eTrade with fees reportedly around 0.5%. That immediately put a lot of pressure on lots of existing crypto platforms. So what just happened is eTrade users will now get direct access to crypto like Bitcoin, Ethereum, and Solana. The infrastructure is being powered by Zero Hash, and this rollout has reportedly been in development for months. And the biggest story here, like why we find this news so interesting, is of course the fee is very attractive. Like if the 0.5% fee is accurate, then that would undercut many existing crypto platforms, especially for smaller traders. And this is, of course, adding a lot of pressure to platforms like Coinbase, as they can charge, of course, noticeably higher ticker fees for retail users. Meanwhile, apps like Robinhood always advertise the commission-free trading, but often make those money through the larger spreads behind the scenes. So Morgan Stanley is coming in very aggressively on pricing. And this is much bigger than just fees alone. This is really about distribution because now millions of traditional brokerage users can access crypto without downloading a new app, without opening a separate crypto account, and without learning an entirely new platform. Bitcoin simply becomes another tab inside an existing portfolio. And honestly, that is a huge deal. For years, crypto felt separate from TradFi. Of course, you need to use different apps, maybe Binance or Coinbase, just like completely different systems, different platforms. Now, that wall is slowly disappearing. Major banks are starting to integrate crypto directly into their normal financial products, and that changes accessibility completely. So I do believe this is a major change because, like, think about it, like a lot of people still haven't bought crypto for just one simple reason: is that the friction. Like, there's too many steps, too complicated, very unfamiliar. Is it another zone? But when a trusted brokerage already holding your stocks suddenly offers Bitcoin as well, that barrier becomes a lot lower. So this matters for the industry because every major bank entering crypto puts pressure on fees, on user experience and execution quality. And of course, that will be really good for consumers like you and me. The bigger trend is that TradFi and crypto will eventually merge together, and I do predict that the line between the two will become more blurry for users. So what happened next is like, I'm watching this very closely. If Morgan Stanley succeeds here, other major brokerage will likely follow. Nobody wants to lose younger investors who increasingly expect crypto assets inside their portfolios. So this could become a much bigger competitive trend across Wall Street. So final take, this is not just another broker adding Bitcoin. This is one of the largest TradFi institutions in the world, making Bitcoin cheaper, getting Bitcoin cheaper, simpler, and easier to access for millions of retail investors. And every time that happens, Bitcoin moves one step closer to becoming a normal part of the financial system. So I'm liking what I see. However, it's not all good news. For today's show, Palantir is experiencing some distress. Well, not really distress. They beat the earnings. So what just happened is that Palantir reported massive earnings. Revenue jumped 85% year over year to $1.63 billion. That is the company's fastest growth since its IPO back in 2020. And yet, if we take a look at the stock, like it fell off the cliff. The stock fell more than 6% after earnings. So what happened? Here are the numbers that we need to pay attention. So Palantir beat Wall Street expectations always across the board. So analysts expected around $1.54 billion in revenue, But like the actual number they reported for the company, they actually deliver $1.63 billion instead. Net income also exploded higher. Profit came in around $871 million. That's roughly 4 times higher than a year ago. So one major driver was, of course, US government contracts. Government revenue hit $687 million, up 84% year over year. That tells you governments are spending aggressively on AI, on defense, and data systems right now, especially with rising geopolitical tensions globally. And when it comes to commercial revenue surge, it actually surged even higher. So it's up 133%. The main reason is that Palantir's AI platform, like also known as AIP, so companies are increasingly using Palantir to integrate AI into their daily operations, into data analysis, decision making, and automation. So Palantir is becoming one of the biggest enterprise AI infrastructure players in the market. And management now expects full year revenue between $7.6 to $7.66 billion. That implies around 71% annual growth, and it crushed Wall Street expectations. The market was only expecting around $7.27 billion. So fundamentally, this is supposed to be a really strong quarter. So question like you might have in mind, what happened to Palantir? Why it dropped though? Well, one explanation I could give is valuation of Palantir, and that is no doubt the main concern. Even with this level of growth, Palantir still trades at extremely expensive multiples, meaning investors are already pricing in years of future success. So when expectations get this high, even great earnings sometimes aren't enough. And Palantir is actually not alone here. Like the market is becoming very selective about AI companies. Investors are asking, like, are these companies growing fast enough to justify this massive valuation? That's now the key question we're asking, and why the market has been so brutal to a lot of the AI companies out there. At the same time, if we take a look at AMD, of course, another very AI-focused company, AMD also posted strong earnings. So revenue of AMD rose 38% year over year, and data center revenue jumped 57%, of course, driven heavily by AI chip demand. Its stock actually moved higher after earnings, so it's up at 5%, especially after Morgan Stanley raised its price target. So there's a huge deviation between AMD and Palantir. So the difference here, I would say like the market currently see AI chips as easier to value. AMD is a more straightforward, more visible demand, but software companies like Palantir trade more on long-term expectations and feature dominance, and that creates bigger volatility around earnings. So right now, almost every major tech company is spending aggressively on AI. We know that because we cover extensively here on Roxham TV. But investors will want proof that all this spending creates a sustainable long-term revenue. And that's why even an excellent report, even an excellent earning from Palantir can still trigger stock sell-offs. So the demand for AI infrastructure is, of course, still very real. Governments are buying, corporations are buying, and cloud providers are buying. And companies like Palantir are sitting directly in the middle of that trend. So the final take, if you ask me, Palantir, of course, just delivered one of the strongest growth quarter in big tech. But in today's market, good results are not good enough. When valuations get extremely high, the market expects perfection. And that's becoming the new reality for AI stocks, unfortunately. Speaking of AI, let me know if the viewers are using iOS or if you guys prefer Android. But there's a new update from Apple because Apple is preparing a major AI shift with iOS 27. So instead of locking users into only Apple's own AI, iPhone users will soon be able to choose third-party AI models directly inside the system. So that includes models from companies like Google and also Anthropic. So Apple is calling this new feature extensions. The idea here is quite simple. There will be like different AI apps installed on your phone and will be able to plug directly into Apple Intelligence features. So that will include Siri or writing tools, image playground, or other built-in AI features. So instead of just one AI assistant, your iPhone could effectively become a hub for multiple AI systems. And I would say like there's a part is even more interesting. So users may even be able to assign different voices when it comes to Siri, depending on which AI model is answering the request. Meaning, like one question could be like powered by Gemini, and other one could be maybe by Claude, and then another one maybe by Apple's own models. That's a very different approach from traditional voice assistants for Siri, right? This also comes after Apple's reported deal with Gemini. We know Gemini is expected to help power some native Siri and Apple Intelligence functions. So Apple clearly understands something important here, is that they're losing their ground when it comes to the AI battle. For years, Apple dominated consumer hardware. We know that already. But in AI, companies like OpenAI, Google, Anthropic, and Meta, they have been moving really fast. And even Sam Altman recently called the iPhone the greatest consumer hardware ever made, while also suggesting Apple is starting to fall behind in AI innovation. So what Apple is doing is that instead of trying to build the single best AI model, Apple may be turning the iPhone into the operating system for AI, meaning Apple would control the hardware, we know, it will control the ecosystem and also distribution, while outside companies provide the intelligence layer. Honestly, it's very similar to how the App Store worked during the mobile revolution. This could be massive for AI companies because like it's iPhone at the end of the day. It has like billions of users globally. And if Apple opens direct access to third-party AI inside iOS, that gives companies like OpenAI or Google and Anthropic enormous distribution and almost instantly. Though of course there's still downside. If outside AI models become the main attraction, then Apple risks losing control over the real user experience. And over time, the AI layer could become more important than the hardware itself. And that's a major strategic challenge for Apple. Personally, I'm more amazed by like how fast the AI industry is moving. Because like think about it, like a year ago, most people barely used AI assistants. Right now, major tech companies are redesigning the entire operating systems around them. That tells you how important this race has become. But the bigger picture is like the smartphone may be evolving again. Fast phones became internet devices, then social media devices, then creator economy devices. Now there is an AI operating system, and Apple clearly doesn't want to lose the next transition. One thing I find it interesting is we covered that on Roxham TV, I think weeks ago as well, is that OpenAI is building a phone. So I wonder how would that work? It's believed to be a competitor to Apple because possibly they will be doing their own system similar to iOS. So it's more like a closed system for the users. But if so, that will of course be the direct competitor to Apple. So let me know if you guys would try out or update your phone when this iOS 27 launch out. If all the features sounds good to you, let's have a discussion in the comment section below. All right, so we will take a short break from here. When we come back, we are, of course, having our geopolitical segment. And this time is very important because we have the two most sanctioned countries in the world coming together, becoming friends. Should we concern right now? What are they doing behind the scene? If you're intrigued, make sure to stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. We're now turning to our geopolitical segment, and we have to talk about the two most sanctioned countries in the world. For years, the West has used heavy sanctions to isolate Russia, but instead of backing down, Russia is finding new friends. The most important one is, of course, North Korea. In the middle of global war, these two nations are building a literal pathway to each other. It is a brand new bridge connecting North Korea and Russia, and it's almost finished. So here there are some satellite images show construction is moving very quickly, and experts say this is not just about trade. This is about military cooperation. So what happened here? Here's another one with some descriptions. It's easier to read. So this new bridge is actually across the Tumen River. It sits next to the older, the Friendship Bridge that has mainly been used for rail transport between the two countries. But this new bridge is different. It's a full road bridge designed for trucks, vehicles, and larger trade flows. And according to Russia's transport ministry, the bridge could handle around 300 vehicles a day and nearly 3,000 people daily. And the satellite images also show some new access roads, border checkpoints, parking facilities, and support infrastructure being built around the crossing. That suggests both countries do expect heavy usage. And this comes as ties between Russia and North Korea deepened rapidly during the Ukraine war. Western officials in South Korea believe North Korea has already sent some troops, weapons, missiles, and artillery support to Russia. And in return, North Korea is designed to be receiving some food, fuel, and military technology from Russia. And for years, the connection between these two countries was relatively quiet. Here are some more satellite images. So this was back in 2025. There wasn't the bridge, but now we have the new bridge already. So it's actually quite strategic why they would build that. Very strategic, I would say. Experts say the speed of construction reflects how quickly military and trade cooperation is growing between Moscow and Pyongyang. The agreement to build a bridge was signed during Putin's visit to Pyongyang back in 2024. So that same visit also included a major defense agreement between the two countries. So basically promising mutual support if either side faces aggression. And this bridge, it does matter in geopolitically speaking, because roads, ports, pipelines, and bridges would determine supply routes, trade flows, and military logistics. And this bridge, what essentially does is that it gives Russia and North Korea a much stronger physical connection, especially while much of Russia remains isolated from Western market. One major concern, though, is of course sanctions. A stronger land connection makes it easier to move goods, fuel, machinery, and possibly military equipment. So outside traditional monetary systems we're talking about, that's of course something Western governments will likely watch very closely. And the bigger picture here is this is another sign that the global world order is fragmenting. Like you already have Russia and China, Iran, North Korea, building tighter economic and strategic relationships together, especially as tensions with the US and Europe continue rising. Analysts say the relationship now goes beyond just the war itself, because once infrastructure like this gets built, it creates long-term economic and military links, and those relationships can last for decades. So the final take, it might look small, it's just like a simple construction project, come on, Jamie, but strategically speaking and geopolitically speaking, it's much bigger than that. It's another signal that Russia and North Korea are moving closer together economically, militarily, and strategically. And in a world already dealing with wars, sanctions, and rising global tensions, that's something markets and governments are paying very close attention to. All right, so speaking of war, before we hop onto the next segment, there's some warning because there might be some disturbing news that if viewers just need to be prepared, or if you guys want to skip that next news. So Ukraine's military intelligence say it uncover multiple alleged cases of Russian soldiers eating human flesh during the war. According to reports shared with British media, intercepted voice recordings and photos allegedly show severely malnourished troops operating under extreme starvation conditions. Russia denies the claims and says the report are propaganda. So right now, this cannot be independently fully verified. But according to Ukrainian intelligence, at least 5 alleged cases of cannibalism were documented over the past year. One reported incident involved a Russian soldier allegedly killing 2 fellow troops and attempting to eat part of one of the bodies. Another report describes soldiers complaining about sharing shelters with troops who were allegedly eating dead bodies, eating corpses. Again, these claims mainly coming from Ukrainian intelligence and wartime communications. So viewers should understand the fog of war here. But whether every detail is true or not, the large story, I would say, is believable, because war creates horrific survival conditions, especially when supply lines got collapsed, got disrupted, food runs out, temperatures become extreme, and soldiers become isolated for long periods. There have already been many reports throughout the war about Russian troops facing shortages of food, equipment, and medical supplies. And honestly, eating other human and cannibalism during extreme war or famine situations is unfortunately not new in human history. We have seen it repeatedly across different wars and disasters. When societies collapse and people completely run out of food, some humans eventually eating dead bodies or corpses to survive. That has happened during famines, concentration camps, wars, and shipwreck disasters throughout the history. It is very horrifying, but honestly, it's not unheard of. And importantly, like eating human flesh can have severe psychological and biological consequences because, historically speaking, cannibalism has been associated with extreme trauma, mental breakdown, disease transmission, and long term neurological problems. One famous example is, of course, the Kuru disease in Papua New Guinea, linked to consuming human brain tissue. So even historically speaking, like societies viewed cannibalism as last stage collapse scenario. And the deeper issue here may actually be military logistics. Some earlier reports already claim Russian troops were receiving expiration, not enough food during parts of the war, especially during harsh winter conditions. And military analysts have repeatedly said Russian supply chains have faced major threats throughout the conflict. So a lot of people online discuss war like a strategic game, but history stories like this remind people what prolonged warfare actually looks like on the ground. So there's starvation, isolation, psychological breakdown, extreme survival conditions, and that's the reality soldiers sometimes face during long conflicts. And the Ukraine war is now stretching years longer than many originally expected. And the longer the war continues, the more pressure will build on resources, on morale, logistics, and manpower for both sides, so not just for Russia. That's why long wars historically become increasingly brutal over time. But the important context here, it's important to say very clearly, like these reports have not been fully independently verified. And wartime information is often used as propaganda by both sides, but even if some details remain uncertain, the broader reality of starvation and horrific battlefield conditions during war is very real historically speaking. And war eventually pushes human beings into conditions most people can't even imagine. So that was some I would say a little bit disturbing. For sure, we need to take a break from here. And when we come back, we are diving into the Bitcoin world, jumping from geopolitics to our beloved digital assets, of course, being Bitcoin. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. We're now jumping towards the Bitcoin world, and we do have the Colombia's president, so Petro himself, is publicly backing Bitcoin mining, not just casually. He said Bitcoin mining could become a major economic opportunity for Colombia's Caribbean coast, especially if it runs on renewable energy. So, in a post on X, the president himself, Petro himself, argued that regions with large amounts of unused clean energy can attract Bitcoin mining investment. He pointed to countries like Paraguay and Venezuela as examples already benefiting from this trend. He also called Bitcoin mining an immense boost for development in the Caribbean region. And if you guys don't know, if you are not from Colombia, here are some details. So his president, Petro, he is known globally as a climate-focused leftist leader. He has repeatedly criticized fossil fuels and warned about climate collapse. So this is not a politician suddenly abandoning the environmental concerns. What he's doing instead is that he's making a distinction between Bitcoin mining powered by fossil fuels and also Bitcoin mining powered by renewable energy. So if a country already has excessive renewable energy sitting unused, his point is, why not just monetize it? And that's the core argument he's making here, because electricity that cannot easily be exported can instead be converted into Bitcoin. And many don't know, Latin America actually has a huge Bitcoin base around the region. So Paraguay became a major mining hub because of surplus water power. And right now, Colombia wants to explore something similar, especially because most of Colombia's electricity already comes from renewable sources. So that's far above the global average. And another part is quite politically correct, I would say. So Petro proposed involving the Wayu people, which is the indigenous community, directly to the mining projects and potentially even as co-owners. That's really significant because resource extraction projects in Latin America often create tensions with local communities. So the president, or Petro himself, is trying to frame Bitcoin mining as shared economic development, not just outside corporation extracting value. Now, this is what sounds interesting, but there is a major challenge here. Like Bitcoin mining economics are brutal right now. Mining only works when electricity costs stay very low, and some analysts argue Colombia's energy costs may still be too high compared to other mining hubs. And there's another issue. So when it comes to the presidency of Petro, his term is ending soon, and Colombia will have elections coming very soon. So it's unclear whether the next government would continue pushing this strategy aggressively. What's interesting here is that the government are no longer talking about Bitcoin only as speculation. Like they are discussing Bitcoin mining as more like the infrastructure and energy monetization, because might as well, there's some idle energy here. And then they're discussing Bitcoin mining as industrial policy and regional development. That's very different from conversations just a few years ago, right? Final take here, the story is really about energy here, not just Bitcoin. Countries with stranded and renewable energy are increasingly asking, how do we turn the unused electricity into economic growth? And Bitcoin mining is becoming one possible answer. Whether Colombia actually succeeds or not, the fact that a climate-focused president is openly supporting renewable power Bitcoin mining shows how much the global conversation around Bitcoin is changing. And honestly, I'm liking what I see. Well, and other news we have to cover when it comes to Bitcoin is there is a shocking news because just yesterday, we have this post from Michael Saylor. Michael Saylor, of course, he has been the biggest Bitcoin bull whatsoever. He posted this on X. So BTC capital gains fund STRC credit dividends. So of course, like a lot of people are very concerned. Is this a black swan event? Because like he is always famous for one message, is that he will never sell Bitcoin. That became almost, I would say, like almost like a religion inside parts of the Bitcoin community. But right now, of course, the narrative is changing because MicroStrategy just confirmed it is willing to sell those Bitcoin if it benefits the company financially. And honestly, from a business perspective, there's nothing wrong with that. It actually makes sense. So like what happened is that Strategy reported a massive Q1 loss, a net loss of around $12.5 billion. That is mainly because Bitcoin dropped heavily earlier this year, creating huge unrealized accounting losses on its balance sheet. Meaning because the accounting standard changed for the US companies, even MicroStrategy, they did not sell any Bitcoin. They have to mark as a loss. And remember, like MicroStrategy, if we take a look at the holding here, they hold 818,000 BTC on the balance sheet. So when Bitcoin moves sharply, their financial statements will move very fallently as well. The important part was like what management said afterward. So the CEO, he said, we will sell Bitcoin when it's advantageous to the company. That is a major philosophical switch, I would say. Not because Strategy is banning Bitcoin, but because they are evolving from passive holders into active capital managers. And honestly, people need to separate the ideology from business reality here. Some Bitcoin maxi would portray Michael Saylor almost like a Bitcoin god who would rather die than sell one coin, one Bitcoin. But if we listen carefully to what Michael Saylor has been saying and actually watch the MicroStrategy's earnings call, that's clearly not how MicroStrategy or Michael Saylor himself sees it anymore. He increasingly talks about Bitcoin as a financial asset inside a larger capital structure. It's more like a tool, definitely not a religion. And the story here is, of course, STRC we have to talk about, and we have been talking about on Roxham TV quite a lot. So Strategy's preferred stock and digital credit product, STRC, is one of the most popular product in 2026. So Michael Saylor is trying to build an entirely new financial model around Bitcoin-backed credit markets. That's the biggest vision, like the big vision here. Not simply just like buy Bitcoin and never touch it and never sell a dime. He basically compared MicroStrategy to, I would say, like a real estate developer. So the example that he gave is that you buy land and the land appreciates. Then sometimes you sell parts of the land to pay financing costs or fund further expansion. That doesn't mean you suddenly hate real estate. It just means you are managing capital efficiently. And that's exactly how Michael Saylor himself now sees Bitcoins and how he sees Bitcoin. Because many retail Bitcoiners built an image of MicroStrategy or Michael Saylor himself as the ultimate diamond hands company. But in reality, I hate to break it to you, public companies operate differently. Like they have debt obligations, they have preferred dividends, cash flow requirements, and shareholder expectations. That's the reality of corporate finance. And people also forget like how painful it was back in the previous cycle. So if we hop onto MNAV, for Michael Saylor, MicroStrategy MSTR holder. So back in 2022, you will know that MSTR actually collapsed the MNAV below 1x, like meaning the market value the company near or even below the value of its Bitcoin holdings. And MSTR actually underperformed Bitcoin badly during parts of that period. even after like Bitcoin started recovering in 2023, MSTL took longer to recover because investors were worried about that risk and leverage. That experience like clearly left scars, and that's why they care about risk management right now. And honestly, I would say like good business learn from painful cycles. Like Michael Saylor is just saying like 2022, it was not fun. Right now, we have to be more cautious. Like, what if Bitcoin dropped more? Might as well just take a little bit of profit off the table. This is exactly what they're saying. This is what a good businessman would do. So it's not panic, it's not surrender, it's just risk management. And I want to emphasize this clearly. Like, I'm personally not very concerned about MicroStrategy's short-term survival. The reason why I'll say this because like they reportedly still have over $2 billion in cash reserves. That's enough to cover debt-related obligations for quite a while, roughly around 1.5 years from current estimates, so 1.5 years. So this is not some emergency liquidation situation we're talking about. So it doesn't look like a black swan event just yet. And what they may sell Bitcoin for, possibly like management specifically discuss like selling Bitcoin to optimize capital structure, fund dividends for sure. That's what they imply on the X, right? Manage liabilities or improve Bitcoin per share efficiency. That's very different from like, oh, we're selling because we're bearish right now. In fact, strategy still wants to effectively hold those 1 million BTC on the balance sheet. So the long-term accumulation thesis hasn't disappeared, hasn't changed yet. Honestly, what we are watching may simply be Bitcoin entering a more mature institutional phase. Like early Bitcoin culture was just like buy, hold, diamond hand, never sell. But institutions simply don't operate like that, like us retail would do. Institutions actively manage assets, especially when leverage, preferred shares, and capital markets are involved. Now, the real debate is whether STRC, the model, is sustainable long term, because right now they're offering 11.5% yield. Because like the structure depends on several things staying healthy at the same time. It comes down to Bitcoin price, investor demand, access to financing, and also confidence in MicroStrategy balance sheet. If one breaks badly, the system gets stressed. At the same time, products like STRC are attracting real institutional interest because they are offering something very unusual, which is like Bitcoin exposure combined with yield. That's very attractive in modern finance, and especially for investors wanting income. So I think the key realization here is this, like Michael Saylor, he is not abandoning Bitcoin, but he's also not treating Bitcoin like a religion because like, trust me, I've come across many Bitcoin maxis like that. Like Michael Saylor, he's just treating it like capital, like an actively managed financial asset inside a broader corporate machine. And honestly, that's probably how most large institutions will eventually treat Bitcoin too. So my take is like the whole never sell Bitcoin era might be ending for MicroStrategy, or he never even viewed that the diamond hand more like a financial tool. But that doesn't mean the thesis is broken. They still want that 1 million BTC on the balance sheet. It may simply mean Bitcoin is evolving from a pure ideology asset into a fully integrated financial instrument. And whether Bitcoiners like it or not, that transition was probably inevitable once Wall Street entered the game. All right, so speaking of like Bitcoin, let's also hop on to keep saying AI16 set, A16 set. So the crypto fund. So what they've done here is quite surprising and could be bullish. Some people will view it as bullish, but there are very interesting takes that I feel like we need to talk about here. Because like what they did is that they launched a new $2.2 billion crypto fund called Crypto Fund 5. But honestly, the most important part is not like, during this condition, they still managed to raise that amount of money. It's not that. It's the tone. Because some of the biggest names in crypto, in crypto investing are now openly admitting that large parts of the crypto industry are basically dying. For years, crypto was driven by hype cycles. We've seen the meme coin manias, lots of speculation, fast pump and dump, easy liquidity. But right now, like even major crypto investors are saying the industry is entering a survival phase where only projects with real usage may survive long term. So every crypto cycle follows kind of the same pattern. And here's what the report is saying. So first, there is this speculation phase. So absolutely explodes. Everyone was talking about that on X. And then there comes the huge amount of money rush into the market. Some gets wasted, but like some gets used to build a real infrastructure. And after the bubble collapses, as it always does for meme coins and altcoins, the real products quietly remain. And that's basically the argument A16Z is making here. So even during the bull market, the bear market, even during the bear market, stablecoin usage kept growing. People are using stablecoins for savings, cross-border transfers, payments, and dollar assets. Not because they're speculating, like he was speculating on stablecoin, right? But because traditional systems are very slow, very expensive, and inefficient. And that's very important distinction. And what AI is saying here is that the industry is maturing beyond just pure speculation. Maybe like we have seen more hype on things like prediction markets, on-chain lending, tokenized assets, so RWA, and stablecoin credit systems. They are all becoming the actual financial infrastructure, not just crypto experiments anymore. And honestly, another part of this discussion was quite brutal, very brutally direct. Investor and also the author, so when it comes to the Anthony Pom, he wrote it on Substack. So what he said in the report is that most of the crypto is already dead. They are never going to come back. That sounds very harsh, but the argument he's making is quite interesting and to take note with. So his point is this, like, in traditional business, bad companies eventually just die, maybe bankrupt. They won't exist. But in crypto, it's a different story because like chains rarely just fully shut down, and tokens almost never go completely zero, like maybe like a fraction of a cent, but it's never like really zero. So the industry becomes filled with dead ecosystems, dead liquidity, and dead communities that technically, of course, they still exist, but nobody actually uses them anymore. Honestly, this is a fair point that he raised. Do people really believe millions of crypto tokens will all survive long term? I mean, probably not, right? Most would likely disappear slowly over time, and even if they never officially die, like token not officially went to zero. Another major point he raises is that crypto used to be driven by true believers, like people who care deeply about decentralization or financial freedom. But right now, much of that industry is dominated by short-term traders chasing fast money. We talk about that with the on-chain analysis on yesterday's show, because like even despite Bitcoin sitting at 82K right now, it's not driven by spot trading. It's more like future trading. So when it comes to future trading, most of the traders, they don't believe in the long term. They're just chasing for the fast gain. And that's why in the previous bull market, you have seen the meme coin mania, lots of pump and dumps on only selective altcoins, market manipulation, and endless low quality projects. And this is one of the biggest shifts happening right now. So TradFi is rapidly entering crypto. That's literally the first story of the show today. Big banks, asset managers, brokers, institutions, they are slowly absorbing the industry. And honestly, that changes the culture completely in crypto. Because like what we are seeing right now, if we just look at like the Bitcoin ETFs, Morgan Stanley like adding Bitcoin trading, BlackRock entering crypto, and traditional banks offering custody. the industry is becoming more institutionalized. And honestly, this ties directly into what we just discussed with MicroStrategy and Michael Saylor. Because years ago, the message was never sell your Bitcoin. Right now, even Michael Saylor openly talks about like active balance sheet management, selling some Bitcoin if needed, using Bitcoin as collateral, using Bitcoin to support dividend structures. And that tells you crypto is becoming more integrated into traditional finance logic. One side is still like chasing hype and speculation. We always have those type of people. The other side is building actual infrastructure, and increasingly capital seems to be flowing toward the second group. And according to Paul in the article that we're showing, like long-term value may eventually concentrate into just few core areas, maybe in Bitcoin, stablecoins, blockchain infrastructure, and tokenized real-world assets, so being RWA. Honestly, that's also increasingly where institutional money seems to focus on these days. But what about this fund? So we go back to the $2.2 billion crypto fund from ASIC and SET, right? I would say like despite all the chaos, they still believe crypto infrastructure itself is very real, like especially when it comes to payments. No denial over that. Payments, RWA, AI agent economies, digital ownership, and global financial rails. That's the long-term bet, and that's what AI16Z, I mean A16Z, I keep saying the token name. So A16Z is betting on. They're seeing the long-term vision here in the crypto market, and that's the difference. Like the conversation, I'll say, is becoming a lot more serious compared to any of the previous cycle we have seen. So less about crypto will replace everything tomorrow, but more about like what parts of crypto can actually solve real problems. That's, I would say, a much healthier conversation that I've been waiting for cycle over cycle, year over year. Looks like we're finally entering that phase. Her final take is the crypto industry may be entering its biggest cleanup phase yet. Like a lot of projects probably won't survive. A lot of tokens may slowly fade away, but underneath all that speculation, real infrastructure is still being built. And the next phase of crypto may look very different from the last one. Less hype we're talking about, more integration with TradFi, and a much bigger focus on products people actually use on a daily basis. All right, so I would say it's some bullish phase and some good news I've seen in the crypto space. That's pretty much what marked the end of our today's segment. But before you go, make sure to give us a follow on X. So my X is jamjamcrypto_io. Make sure to follow Roxum TV on X as well, because we have regular updates coming out on an hourly basis by different hosts as well, interviews, different prominent guests on Roxum TV. So make sure to give us a follow. Make sure to subscribe on YouTube if you haven't already. My YouTube channel is Jamjam Crypto. And also for Roxum TV, it's really easy at Roxum TV. I'm live here Monday through Friday starting at 3 a.m. The recorded version is also available on both channels, so make sure to give us a follow. Thank you guys for watching, and see you guys in tomorrow's show.